Hello and welcome to the Watson Farley Williams Watch This Space interview series with me, your host, Randeep Babra, a partner in the aerospace team here at Watson Farley. And in today's episode, we'll be discussing a number of interesting topics with our guest, who I'm delighted to welcome, Mark Boggett from Seraphim. Just for those that don't know, this series is part of a video series that we're doing across space generally. And for those listeners that don't know Watson Farley, it's a global law firm and is one of the leading firms in the space sector. I personally have been involved in the space market and financing in particular across the last 10 years. So that's a brief introduction of Watson Farley and myself. Mark, delighted to have you. Can I hand over to you to introduce yourself and Seraphim?
Yeah, well, it's great to be here talking about my favorite subject of space. So I love doing podcasts like this because there's a lot of education that's required in the market for folks just to realize what a huge opportunity that presents us through space. So let me introduce myself. I'm CEO and co-founder at Seraphim. We are coming on 10 years old now, and we're the first firm that set up a venture fund globally to focus on space. And then we've built that out. We now run a space accelerator, which is the biggest of its kind in the world, now on to our 15th cohort. And we also have a venture fund focused on space and a growth fund focused on space. And that growth fund is listed on the London stock market. So across all of those three initiatives, we have 133 space tech companies in our portfolio, which makes us the most prolific in this investor in this market globally. We've had 6 M&A activities. We've got, including IPOs, we've had 4 unicorns, one which has turned into a decacorn. So, this is a market that is that's really well positioned. So I look forward to digging into your questions.
Absolutely, it's brilliant, and it's amazing to always hear such a success story. But I suppose before we get into the meat of the discussion, Mark, what drove you to work in the space industry?
So financial profit. Yeah, I didn't grow up wearing space pajamas and being really focused on this sector. I've always paid a passing interest and really enjoyed everything to do with the market. But I really came into this as a red-blooded venture capitalist looking to make money. So as a venture capitalist, what you're really trying to do is identify trends in advance, sort of 10-year trends that you can invest into. I was really super interested in what Elon was doing with SpaceX, and that was really getting me thinking about what comes next. He, through SpaceX and the low-cost reusability, is opening up space to commercialization at low cost. I mean, just as an aside, as of last year, there was a launch every 34 hours. That's really been enabled by the likes of SpaceX. So it's not just lower cost; it's also now just highly available. So what's going to come next? And when I started to look into it, I realized that there was a multi-decade growth theme that really was much broader than just space itself. It's about defense, it's about climate, it's about energy, it's about autonomous mobility, it's about the smart cities, it's about food security, it's about all of these big growth themes where space sits in the nexus. And when I really started to peel the onion, it became really apparent to me that this was a giant opportunity. I couldn't quite believe that there were no other venture funds globally focused on this same area, and that's the reason why myself and my co-founder decided to set a fund up focused on this massive opportunity, and we got the timing just right.
Yeah, and it is amazing, and it's interesting. On the financing side, you see a lot of funds and sovereign wealth funds and other people now getting into the market, but that's sort of 10 years later than kind of the timeline that you're talking about. So it is
Yeah.
it is
Well,
it is very
what's
interesting.
happened? What's happened is that the companies have matured. So there are now a broader number of mature billion-dollar companies that are EBITDA positive. That these types of investors, need to get companies at that stage to invest into. So it's about the success of the market that's actually led to the next evolution of the investors who are coming in. And they're coming in, they've seen the success of SpaceX. Their eyes are open to, the size of this addressable market. And then defence is really one of the drivers there as well, which is a sort of tailwind behind the sector, sadly, but something that all markets, all governments are now focused on, and space very thematically focused right in the middle of that.
Mm-hmm. So I suppose just touching on those early stage companies that you guys focus on, I mean, inevitably they have huge growth potential, right? But they are sort of that comes with risk. And I guess, how does Seraphim evaluate that landscape so that your portfolio companies have got a competitive advantage? I mean, how do you pick the winners?
So that's my secret sauce that I'm not prepared to share. No, the answer to that question is quite varied. But there's really two key elements to how we do it. One is that we get a giant global deal flow. I've just given in my background the fact that we're the most active investor globally in the market. We've got the biggest portfolio. We've got funds at every stage. We've got a big global profile. We put out a lot of thought leadership. We do the biannual space map that maps out all of the space tech venture-backed emerging leaders globally. We do a publication quarterly called the Seraphim Space Index that looks at all of the international flows of investment into the sector. We break it down by every conceivable way, and big organizations like Reuters carry that every quarter, and it's very well distributed. And we speak at every conference there is to speak at around the world, and we've got a big team which are based around the world. So we work hard on that profile. And what happens as a result of that is a giant global deal flow. So we get to see on a monthly basis more than 75% of all of the deals from the global space market. And that we've been seeing now for the whole life of our organization, 10 years. We've seen more than 10,000 companies. So what that basically means is that because these companies are private, because they share with us all of their material, everything you need to know about the business, we can compare side by side in any category the companies that are raising money now, raising money in the last year, and those that continually approach us through their seed round, their A round, their B round, their C round, where we can see how those companies are tracking and how they are converting customers and how they're growing revenues and what the valuations are. And we've got this sort of near perfect view of the global market. So that means that we can really remain at the cutting edge. So when a new management team walks into my office for the first time and they sit down for half an hour, tell us about their business and why they think they're special, well, we know straight away whether they are special or not. And if they're a management team that we have reason to believe in, then we've got that combination of what we're looking for. So that's number one. It's basically about information advantage and the ability to be able to understand the competitive dynamics of any one particular company, and then importantly matching that against the management skill. The other thing is about our ability to do due diligence. So one of the unique things about the organization and how we actually set it up in the first instance was, in fact, I'll just take a step back to share that with you. We recognized the industry was going to go through a massive revolution. And one of the things that we did when we set up our first fund was we went to all of the large multi-million-dollar space companies around the world, and we said to them, your industry is about to go through a revolution. You're going to be very challenged by these new companies that are coming along. Why don't you invest into my fund so that we can help you understand how the horizon is changing, the new innovation, the new business models, and then we can enable you to find new partners, make acquisitions, and build a pipeline of M&A that can really help their businesses going forward. So this was the reason why our LPs have always been the big corporates from the sector, Airbuses, SES, Telespazio, Teledyne, MDA. Our most recent funds have got Eutelsat, NEC, JSAT, Asia's largest satellite operator. So they've all invested as LPs in our funds, and we help them understand what's going on in the market and get them connected to the right companies. But in return, what they enable us to be able to do is to reach into their business units to help us with due diligence when we're looking at new innovation. They're delighted to see a new battery or see a new particular data capability or a new form of communication or a new antenna. And they're only too pleased to give us their views as to what they think about them. So when we've gone through several companies and we've got collected these views from the experts in the market, that then enables us to really think about the positioning of these companies. So a combination of those two things has meant that we've had a great success both on the upside, but on the downside as well. So in our first venture fund, which we've now sold all of the companies in, it was a 2016 fund, we invested into 20 companies. We had no failures. We're a venture fund investing into space. Doesn't get much more risky than that. But we had no failures. We've got 133 companies across our entire portfolio. I think we've had 5 failures in total in the entire time that we've been operating in space. So we've had more unicorns than we've had failures. You know, and that's quite a statement to make. And I think it's because of these two themes.
That's amazing. I mean, that's such a track record. I mean, particularly in the space market, right, where the risk is high of, you know, and these are some of the things we're going to talk about, right? You've got sort of technology risk, and it's great to hear the insight that you guys have got in that area through, you know, the people at the cutting edge of this, through the major players in the market. And when you're looking at that and focused on technology risk, you have such an advantage over some of the other investors, I guess, who are more concerned about that, because that is one of the risks in the market that people focus on. You know, not only is it the effectiveness of the product that you're going to do here and now, but also by the time you get to market, you gain traction, will something have overtaken that? And I suppose, how do you assess that alongside your partners?
Yeah, well, you know, this is the thing that because of our privileged position that we've carefully forged for ourselves globally in this sector, we can have real conviction when we're backing a company that they are competitively the best globally, and that we have a good idea of what the alternative technologies are and where the various players are within that. The other thing, though, that we very carefully do, and this is worth spelling out, is that we invest other people's money. Yeah. And they are investors with a time horizon where they want to see a return over a certain amount of time. Now, space is easy to get carried away with. It's a long-term, long-growth market. But what we do is we break it down into 3 parts. Now, the next, and then the future. So really what we're thinking about for now is about the infrastructure of these small satellites that are being launched, taking advantage of the low-cost launch, these new miniaturized satellites performing or creating large constellations of digital infrastructure in the sky. So we're really super focused on that. That's $1 trillion market opportunity, but it's about space serving Earth, providing data sets, providing new forms of communication, enabling us to be able to monitor our planet in ways we've never seen before, and really adding capability. But there are real revenues, real markets. When we invest into companies, they rapidly get revenues and grow very quickly. What's coming next is about infrastructure in space, so bigger infrastructure in space. And the advent of the new SpaceX rocket, Starship, is a good example. They can now take 100 tons into space in a single launch. So this is a new era of building big stuff in space. So big stuff is things like data centers in space, cell towers in space, even manufacturing, things like biopharma, drug discovery, drug development, new materials, these types of things in the zero gravity environment where every protein, every molecule behaves differently. This is now an environment where you can start to do manufacturing. So these are the type of things that's happening right now. And again, this is everything that we're doing in space for an Earth's market. There's a real market, there's real customers, there's real revenue. The third area is about the future of space, and it's about really the moon as a stepping stone for Mars. All the technology is required for human habitation in space and space travel and extraction of materials from the moon and all of that. Really super exciting. But who's the customer? Right now, it's the government. And you know, who knows whether they're going to be a continued customer. So there's no commercial market there at all. So we don't do anything to do with that. We're really very focused on the commercial markets. And where there's a commercial market, you can actually go and speak to the customer. And you can say to them, look, this is the data set that you're going to be able to get from this space environment. Would you pay for it? So this is how we get our head around the technology risk. It's really by going to the customer and saying to them, what do you want? How much you're prepared to pay for it? And that really gives us the conviction around the technology. And to be honest with you, technology is not the thing that's the risk in this market. The technology is the easy bit, believe it or not. The hard bit is the hard yards of what the management team have to do. They have to, protect that technology. They have to continue to develop it in line with what customers are looking for. They have to raise money. They have to grow out the team. They have to be internationalized. They have to do this in a competitive environment and adhere to regulations. All of these things, it all boils down to actually the capability of the team. Actually, where their technology is sort of ranked against others in the market often doesn't even really matter. You get a fantastic team in a sector that is clearly going to be growing for years, and that's the recipe for success. Whether they've got the best technology or not isn't the determining factor as to whether they're going to be successful or not.
Yeah, I mean, I think that's so true. There's not true word spoken. We've all seen a great idea fall by the wayside because it's not had the right management or the right backing.
Yeah.
Just touching on one of the other areas, I suppose, that you were talking about, regulation, I suppose, and how these companies, they are often in markets that require licenses and have lots of regulations around them. How does Seraphim help the portfolio companies navigate those challenges?
Well, there's a few answers to this question, and we could talk about it for hours. So in relation to telco, telecommunication from satellites, that's a very well regulated market. 50 years of the ITU, everyone largely agrees and adheres to the rules there. That all works. Anything to do with Earth observation and monitoring from space, the rules and regulations around that are sparse, and each country has its own interpretation of that. And really, that's the area where there's potential challenges. And then there's around the debris in space and managing the space environment. And right now, there are limited rules around that, but there's a general consensus of agreement from all of the regulators what needs to be done. And actually, we've been heavily focusing for the last 10 years on the companies in that market that are providing the regulators with the visibility to measure what's going on in space. So companies like Leo Labs enable the regulator to regulate better, to actually watch what each of these satellite operators are actually doing. And if they're doing something wrong, then they can start issuing fines. So it was only last year where the first ever fine was issued for a satellite operator, not adhering to rules about bringing their satellites down from space. So that regulation is coming in. We very much support it. We've invested into companies like Astroscale and D-Orbit that are enablers for this market to come. So sometimes the regulation is an enabler, and we've really invested heavily to sort of do that. The regulations are then set around the capabilities of these companies that are the enablers of the regulation. So Astroscale, which effectively removes debris from space, that company is at the forefront of a multi-billion-dollar market opportunity that didn't exist 2 years ago. And that company IPO'd on Tokyo Stock Exchange, a billion-dollar valuation. So, this is showing how a regulation is really driving value creation. The main bit in the middle, which is really about how Earth observation is managed, is more challenging. And actually, I don't think it's going to be effectively regulated during the next 10 or 20 years. If you look closer to home, think about social media and all of the data that's collected about individuals and everything that they're doing. Think about all the data that Google are collecting about every time that we enter something into a search engine. They haven't been able to regulate that yet, and that's all happening on Earth and is a lot more focused around us as individuals. What's going on in space is more anonymous, and I think it's going to face all of the same problems that the regulators have had around social media and things like that. So this isn't an area that I expect to get heavily regulated in anytime soon. And I don't have a problem with that. It's the way that the market is, and it's a good opportunity, and it's one of the main areas we're focused investing into.
No, that's interesting. It allows companies to flourish as well, right? I mean,
yeah.
In a way, too much regulation and red tape can also be a hindrance on growth.
Yeah, absolutely.
Just touching on Earth observation then, because it's been a hot topic for a decent period of time. We've had Earth observation companies looking at everything from agriculture to finance, and also sort of small sat manufacturers and operators have been very popular with investors over the last few years, for very good reason. I think certainly we are seeing that growth cycle slow down slightly for certain companies. How does Seraphim see those sectors?
So, well, our view of the world's different to yours. Our companies that are in those sectors are growing very quickly. And we're seeing the opposite of what you just said. So, I mean, to put this in perspective and to sort of provide the audience with some numbers, our growth fund, which is listed on the London stock market, 23 companies, the top 10 companies grew their revenues last year by 71%. And if you actually then weight them by the sort of larger companies, the larger companies are growing even faster. So, we're witnessing a sustained growth. Now, this growth is largely coming as a consequence of demands from defense customers. So space and this digital infrastructure and the new different sensors that are on the types of satellites that we back are providing sort of new superpowers from space that's providing data and understanding that's never been seen before. AI sits through absolutely everything. And all of those that are in the defense market are seeing this new capability. And it's not a nice to have, it's a must have. And it's actually very affordable. And what we're finding now, particularly given geopolitics, is that the budgets for defense are increasing rapidly. And then that increased money, space is at the tip of the spear as to where that money's going to. And then the tip of the spear are the types of the companies that we're investing in that are creating these new data, new data sets that are a real enabler for modern warfare. Because this is the great thing about space. Every space company is dual use. It has a defense application, and the defense organizations from around the world are queuing up to buy this. But with the same satellite, the same algorithms and AI, the same software, you're also serving the insurance industry, the oil and gas industry, or all other industries. So there's this other sort of themes of growth. The other thing that is that's happening at the moment that is relatively new but impactful is that all of the integrators are now focused on space. So what I mean by this are companies like KPMG, Accenture, Deloitte. Each of them have stood up a space team during the course of the last 18 months, 12 months. And what they're ultimately doing is they're going around all of their customers, and their clients are the big companies in every vertical. And they're effectively saying to them, are you aware of space? Are you aware of these data sets that you can use for your business to enable you to make more profit, to reduce costs, to provide a better quality service to your customer? And most of the time, these customers are saying, no, we know nothing about that. And they're saying, well, why don't you try? We can enable you to test this. But often those companies also manage the IT contracts, and they can not just sort of bring this technology and data set to their attention. They can say, look, we're going to actually integrate this into your operational systems so you can use this within your decision-making process. So this is like really fundamental things like, really understanding the weather in real time, that actually is really important to day-to-day operational systems of companies like logistics companies. But previously, how do they access this data and how do they bring that in? So this is a massive change that's actually accelerating the growth of the acceptance of this kind of new data set.
That's perfect. You guys were obviously picking the winners. I think we'd seen some companies with a little bit of slowdown, but it's good to know that there's definitely the green shoots there, and the market is certainly growing in space. The growth opportunities are enormous. Just talking on that changing kind of geopolitical environment, I think you touched on various parts of it there, but particularly on the defense side. I mean, how big is cybersecurity now within your sort of portfolio companies? Is it one of those topics that right at the start of the journey, it is sort of core and center rather than sort of being an afterthought?
Yeah, it depends really on who the customer is, and what the use case is. So, it is important. The data that is being collected, is really tracking everything that's happening on Earth in close to real time in high resolution. You get that in the hands of the wrong actors, and it can be a challenge. So those that need to really be focused around cybersecurity are. The rest of them, it's something that that they can use and buy from third parties, and it's not core to their business. It's going to grow in importance. I mean, we have been backing companies like a UK company called Arkit, for example, that's focused around quantum, and how quantum, when we originally invested, how quantum is going to be operated in the space environment to protect data in transit. So there's a huge focus on this area. It's one of the big themes for growth over the years ahead, because if you think about how much data is being collected, and I talked about data centers in space, and how they're protected. So this is the big opportunity going forward, and perhaps hasn't received as much attention as it should have done up to this point now.
Well, it's interesting because I mean, data centers on Earth are such a growth area, and we're seeing so much proliferation that data centers in space where it's cold, where it makes sense, would be a huge game changer. But just coming to AI, because it's now a household term, everybody knows about it. You've got OpenAI, you've got DeepSeek, bringing powerful tools to the kind of general population. How do you see sort of AI within the sort of space tech sector, and the way that your companies are using it?
Yeah, it's impossible to distinguish between the two. AI is just so deeply involved in virtually everything that we do. So as I hopefully described clearly earlier on, our main focus is about these companies that are building this constellations of satellites that in aggregate are creating this digital infrastructure. Each of them has a different sensor, and these different sensors allow you to collect information about the Earth in different ways. So some of the sensors might be cameras, others might be infrared, multispectral, radar. They all have different properties that have different use cases in different businesses. And the more satellites you put up, the closer to real time this data set is. And actually, the closer to real time you get, the more value the data has. But where this market has moved is that historically, you would hand that data over to an insurance company or an oil and gas company, and they would then have a team of analysts that then work hard to understand that data and then feed that data into their operational decision making. AI now sort of means that any business can then take that data source and incorporate it into its operational decision making. So it's an enabler for businesses to use different data sets and fuse them with other data sets. Now, one of the examples that I always like to give here, because people really understand it, is Waze. If you take Waze, it's just a map, and we've had Google Maps and Apple Maps for absolutely ages, and but what they've added by fusing other data, and in their case, the data, anonymous data from other cell phones, that when you actually add that to a map, you're then able to determine the speed of traffic on every road in every road around the world simultaneously. This is exactly what we mean by being able to fuse this data and applying AI so that it's then incorporated into everyday life for consumers, but also industrial processes and the machine-to-machine stuff that the world is driven by. Increasingly, this is going to be done by data from space, but actually used and made useful by AI that effectively does all of the plumbing.
And I think everyone knows that AI has huge opportunities and is changing the world in vastly the ways that we don't know. But in terms of, do you see challenges with it as well? And maybe just particularly when you're focusing on sort of the financial side of things, the revenue side of things, if you're an integrated company with AI, it's a great enabler, as you say, and great technologies. But those companies, and maybe these companies that you're not necessarily investing in, but those companies that are solely focusing on AI, it does kind of bring the question of what's the right revenue model.
Yeah. Yeah, well, I don't think it really sort of impacts revenue model. In fact, it's an enhancement for revenue model for us. It's selling insights rather than pixels. I think is the way that the industry sort of talks about it. But really, the sort of if your question is really about the sort of what's the downside of AI, it's really about the cost. If you again to sort of the thing that I'm describing is giant constellations collecting data about our Earth in real time. Think about how much data there is there. Yeah. And then you've got to then store that data and then apply AI to that data. The amount of the cost associated with trying to provide real-time insights globally is absolutely huge. So the rising cost of managing the data set, moving the data set, securing the data set, applying AI to the data set. This is the companies need to get their business models right so that they can still be profitable and provide the service that their customers are looking for. The other thing that AI sort of creates is a lot more competition. And this would actually go back to the point that you were saying that in your experience, you're seeing companies that are in this market that are actually seeing declining revenues. And are challenged. And there are definitely companies out there that are in that position because actually AI makes it very easy to come into the industry and start providing a service. Yeah. And that's led to, thousands of fledgling companies coming into the market and offering these services. Some of them not very good. And these companies are not going to be around for very long. But if you're a potential customer in the market that requires these services, the level of noise is really high. If you want, you need this particular data analyzed, you want particular data set, it's really difficult to choose. Who should we choose? Are we going to choose it based around price? What are we going to choose it around? So increased competition is definitely one of the negatives that AI enables. It makes it a lot easier to come into this market. Now, the companies that sort of own their own satellites, own their own data sets, develop their own capabilities, they're really differentiated from a company that is just set up AI buying data from somewhere. But if you are an insurance company that doesn't really care about that, they just want these insights. They don't. They struggle to compare those two companies and say which one should I be going with. And this is an issue within the industry that is only being sort of increased by the ease of access to AI.
That's perfect. I think if we look at the journey of a company and there's the growth phase and everybody wants the revenues to continue to grow, but you've got the sort of Series A, Series B, Series C, and you see that continued expansion and growth of the company. Then you kind of get to that second phase where particularly if you're looking at bigger constellations with the satellite side, the CapEx requirements are just huge and you need, sizable financing and funding. How does Seraphim sort of assist companies with that sort of second part of their growth journey, whether it be on sort of, exits for founders or kind of, the management team or also the kind of incoming financing?
Yeah. So we're a hands-on investor. So we join the boards of most of the companies that we invest into. So when we're on the board, what do we do over and above sort of monitoring our own investment? Well, we try and help them grow the business. So when they are hiring new C-level people, we will be involved with the interview process. So has a new entrepreneur, first-time entrepreneur, ever hired a VP of sales, a VP of marketing, a new CFO? So we make sure that we bring our experience in those hiring processes to avoid them hiring the wrong people. So that takes up an awful lot of time, but it's worth its weight in gold because you hire the wrong CFO and you've put them in post for 6 months. The impacts are absolutely huge. So that's one way that we do it. The other way is that growing a company is a journey, and the capabilities of the management team change as the company goes from revenues of 1 million to 10 million, from 10 million to 25 million, from 25 to 100, from 100 to 500. Each stage, you need to really sort of reassess the capabilities of the team and make sure that you've got the right skills for the next phase of growth for that business. And it's really difficult to dispassionately do that as the founder of the business and looking around the people that you've worked with that have got you to that, 25 million of reoccurring revenues, and then critically looking at them and saying, well, actually, you're not going to be any good to help me take this to 100 million. So our sort of external objectivity is something that allows us to sort of tap the CEO on the shoulder and say, isn't it about time we thought about a new CFO? And they're often sort of taken a bit aback by that, first of all. But then when you sort of say, well, let me introduce you to the CFO of one of my D stage companies, and we'll go for, a coffee or something. And they spend even half an hour with this guy who talks about how he works and how he operates, and they immediately recognize the need for change. And then, of course, we are very well positioned within the sector to know all of the other co-investors, the other venture funds. We've invested through our funds with more than 300 other VCs. Our accelerators have invested with, again, 308 other VCs. So we've got relationships with all of the other VCs, but also with the corporates that there might be customers, the agencies, European Space Agency, UK Space Agency, NASA, JAXA, all of these agencies that we've built really deep relationships with over the years. We have these relationships in place where we can make introductions and open up doors. And then when it comes to fundraising, one of the biggest sort of signals that we can do to help a company is by continuing to invest in later rounds. So if we invested into a company in the seed stage and we're still writing checks in the D round, that really gives a lot of confidence to incoming investors who come in and they say, look, you're a space expert. Tell us why you originally invested and why we should invest at a price that's 20 times more than our original investment. And we say, well, we're participating in this round on the same terms. We're just as excited right now as we were when we made that original investment. And these are the reasons why. So that really helps get confidence to other investors like sovereign wealth funds, like private equity funds, like general investors who are coming in on each round. So that is the way that we've sort of structured ourselves to have funds that are able to invest in each different stage of a company's journey.
Well, that's perfect. And I think looking to the future then, because I think, so much of space is based on the future and growth and things like that. The US has been such a dominant global player in the space market, with, the largest space companies, or even if you look at politics, we've got a new US administration. You've got Elon Musk playing a really prominent role. Do you think that's going to make it easier for space companies to flourish, or is it going to be a case of business as usual?
So net, I think it's good news. Trump in first term did a number of things that are pro space. He created the Artemis program about taking man and woman back to Earth. Now that's been joined by many other nations around the world. So this is a path that we're now on. He created the Space Force in the US, and that has now been replicated in the UK and other countries around the world, building their own Space Force. And then obviously his alignment with Elon. So I think all of the evidence is there that the US is going to be focused on this market, and that they're going to be using all of the tools that they have to help America grow. So being proactive about regulation, being supportive about grants and that kind of funding. So they've already gone through this process where they've made it really very clear, and this is particularly true of the defense organizations in the US. They're saying, we want to partner with early stage companies. And they've never done that before. It's sort of something still new. So it's less than 5 years old, three or 4 years old, really. But that means that the types of companies that we're investing into are rapidly accessing massive contracts from these giant organizations because they need to be at the front edge of cutting edge technology, because these technologies are available commercially, which means that their enemies can go and procure this in the open market. So this means that the defense organizations need to have access to this new cutting edge. And and that is well recognized by Elon. It's well recognized by Trump. So that is a big tailwind. US is still the leading market globally. We believe that the change of leadership over there and the prominence of Elon is going to mean that is going to continue for the foreseeable future. But there's an awful lot more going on in other territories. And again, sticking to sort of defense, thinking about the NATO nations, where it's absolutely clear now that their sub 2% commitment of their GDP to their defense is no longer sufficient. So we're going to see a first time ever, united massive surge of growth in defense spending. A significant proportion of that is going to come into the space market, and then the same is true over in Asia. So globally, through geopolitics, we're seeing this massive potential interest, and that of course then brings in other investors. All of the private equity players are sort of saying, well, we can see that defense budgets around the world are set to continue to grow for the next decade. How do we play that? And they do some research and they find out that space is a good way to play, and that then brings in other investment into the market. I mean, again, to help sort of put this into numbers, our growth fund, the portfolio companies of the growth fund, last year raised $900 million in equity funding, and this huge amounts of money, many of them coming in from new investors that weren't investing in the space market 2 years ago. But their appetite to invest is growing because there's this pool now of companies that are EBITDA positive. They've got valuations of $1 billion. They've got rapidly growing revenues, and yet there's an expectation that they're going to continue to grow. If you're again looking at SpaceX, $350 billion valuation for that business at the moment.
Huge.
But what does that mean for the valuations of all of the other space companies that are also operational in the market? What can they get to? It's not inconceivable that we're going to have tens of companies valued at $10 billion, $50 billion, and we're confident that that's the way that the market's going. So all of the sort of focus by the US, the focus by Trump, focus by Elon, I think it's the right thing, and it's going to accelerate the growth of these businesses.
Yeah, and everyone's waiting to see the impact of a Kuiper, Amazon. You see all these massive companies investing into space, making huge capex investments.
Yeah,
it just makes total sense. It gives credence to space is now at the forefront of people's minds. I think this has been great. I mean, just reflecting on Seraphim's journey and all the kind of topics that we've spoken about today. What sort of 2 messages do you want our listeners to take away both about Seraphim and also investing in space generally?
Well, let's take that out of order. Let's talk about investing in space in the first place. So again, I'll put some numbers here. So there's only ever been 18,000 satellites launched since the very first Sputnik satellite was launched. Half of those were launched since 2020. So what we're going through right now is a rapid building of this digital infrastructure that's surrounding our planet, that's allowing us to have more communications, more data about everything that's happening on Earth. And that is going to improve our standards of living. And again, I sort of go back to the sort of examples of ways, and people can think about how GPS, is a utility that they rely on every day. The type of new capabilities that are coming through are going to be game changing for your everyday life. Simple things like being able to identify whether a parking space is available or not. These kind of things are going to make our Saturday mornings better, and they're upon us right now. So, but we're really only at the beginning of this stage. 18,000 in space in history. We're going to be 400,000 satellites in space, during the course of the next decade. So that just sort of puts it into perspective of how it's going to change, but also where on that journey we really are. So, a lot of people have the view that this has all happened. And the fact of it is that it hasn't. We're still at the very beginning of this journey, and there's lots of opportunity. So that's the market and this sort of digital infrastructure, which is really where the big play is right now. And then just really in relation to Seraphim, I hope I've made it clear during the session today. We've got a unique position in this market, and I pinch myself frequently that we're a global leader, a UK company, a UK listed business, but we're a global leader in a market like space. We've got this information asymmetry by seeing all of these deals. And because of our giant corporate partners like Eutelsat and NEC and JSAT and these other big players, we're able to reach into their business units to ask for help when we're evaluating these new companies. And they've got, literally hundreds of thousands of PhDs that think about nothing other than space that we're able to draw upon. So those two things together have made us successful in the past, and I believe that we're going to be more successful as we go forward as this market continues to open up.
Absolutely. Well, that's definitely great to hear. We like to ask all of our guests a fun question to end with. So, what's your best space joke, Mark?
Wow, that's a good one. So here is one. I go and do a speech every year in my children's school, and in fact I've actually got it tomorrow this year. But this is the joke that I give to the kids. So how do you make an astronaut's baby go to sleep?
Don't know. Go on.
Rocket. I love that joke.
Simple but effective. I like it. Well, look, Mark, thank you. It's been a true delight and pleasure having you on the podcast. We're doing a whole series of these videos, and I'm sure that's been super interesting to the listeners. We've been talking about, the US, geopolitics, Earth observation, sort of the full journey cycle of a company from, startup to unicorn. So thank you everyone for listening, and we look forward to seeing you again.
Great. Thank you, everyone. I hope you enjoyed the space education.